Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Glorick and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you so much for being with us today. I'm your podcast manager, Tammy, and on the line with me, I have our host for the day, Jennifer Gligorich. She is the COO of Leafy Legal Services, and they protect assets for real estate investors and entrepreneurs. And she has another amazing guest on the line today, so I will go ahead and pass it on to her. Hey, Jennifer.
Hey there. Hey, Leafy Podcasters. So, today's guest we really need to talk to because now we're getting to the tax point, and our guest today is an expert with capital gains tax solutions. He has a capital gains tax solutions website. He's an entrepreneur, CRE investor. He holds a Series 22 and 63 license. He is a Deferred Sales Trust expert, Northern California multifamily expert. So there are many, many things and rabbit holes we can go down in, and I'm going to try to push it towards the tax things that us as investors, with everything we're going through, we're going to want to know today, but I might go off topic, but I'm hoping not. Anyway, everyone really needs to welcome Brett Swarts to the show. It's Brett Swarts with Capital Gains Tax Solutions. Hey, Brett. Sorry, I mangled that a little bit, but I didn't mean to.
Hey, Tammy, Jennifer, excited to be here to add some value to you and your listeners.
Yes, I am so excited to work with you because you've worked with everyone. So you've worked with billionaires, doctors, dentists, newbies, everyone and in between. And like right now, it's just weird because, even the most stalwart investors, nobody knows what's going to happen. It's just so nuts still. So we are coming out of this COVID-19 solution. Some states are doing, really coming out of it. Some are still a little bit locked down, but it really doesn't matter because no one has a crystal ball. Nobody can see the future, but we can get ahead of the curve. And one of the things that you work with, and I want to know a little bit more about, is you do the Capital Gains Solutions website. So tell us a little bit about you, your background, so everybody can understand what an expert you are and why it's important. We all need to listen to you and what's going on right now with you.
Excellent. Thanks, Jennifer. So most high net worth individuals, or those who own businesses or real estate, they struggle with capital gains tax, and it's somewhere between 30 and 50% of their gain when they go to sell. And so we use a deferred sales trust to give them tax deferral, liquidity, diversification, and the ability to say goodbye to the 1031 exchange forever so they can create and preserve more wealth. So my backstory starts at Marcus and Millichap in 2006. And I saw some of the most highly appreciated assets bought and sold during that time. And then just a couple of years later, the marketplace crash and my clients, friends, and family lose a lot, and some lost everything. And I was just a new broker at the time, just trying to make it in the business, newly married, my baby girl at home with my wife. And we were trying to, she wanted to stay home full time and be a full-time mom. And I grew up in a family where my parents were divorced when I was young. And so I always knew that I wanted financial security and margin in our lives. And that's what my wife wanted too. But it was tough because I was just a brand new broker. And so I started to learn and started to grow and make money. But for those who don't know, commercial real estate brokers, it's kind of sink or swim. You either, close a deal and make a big check, or you get zero. There's no benefits and no kind of safety net there. But I really loved the business, and I loved helping people solve challenges, and I knew I wanted to be in it. And so just when I started to get some traction and succeed, the 2008 crash hit. And that became a big kind of clarifying point of, do I really want to stay in this business? So I had a lot of friends and family saying, hey, you got a baby at home. You've got, you're not making much of any money. I mean, some years I would make zero, some years just, $20,000, but I said, I love the business, and I did what every good entrepreneur does. And you figure out a way to keep your dream alive. And so I had a very supportive wife, and she, basically got side jobs. So by night, I would work at a restaurant, and my favorite restaurant was Cheesecake Factory at the time. And we said, whatever it takes. And by weekends, I do basketball tournaments. And so by day, I'd be making phone calls to learn about the real estate business and try to sell someone's $1 million property. But by night, I could, sometimes I would see that person I was calling in the restaurant, and I'd have to, kind of dodge because they say,
Oh, wow.
he's,
Yeah. That's hard to do. Yeah, that's
but
really hard to do, but you got to do what you got to do, right? It doesn't diminish your expertise. And guess what? There's a lot of people clutching master's degrees right now that are doing the same thing because we have to do what we have to do. It doesn't diminish your expertise. It's just, at least you're a go-getter.
Exactly. It really clarified what I wanted to do. And also, I had to adjust, right? So I also had to figure out a way, how do I actually get business here and in real estate? And because it's hard to be having the candle burning at both ends. And I wanted to be a successful husband and father, provide for the family. And so just in time, my manager at Marcus & Millichap, he brought in a gentleman to speak on the Deferred Sales Trust. And it's one of those moments where you have, I call it like an epiphany moment, right? Where this part of your brain opens up to something that can so brand new and can solve so many challenges for the clients, friends, and family who lost everything, but also give me a way to make it in the business. So the plan was this: understand this strategy, implement it for my clients, and start to grow the business. And so that's what I did. And all of a sudden my business took off. I started to grow. I started to be successful. I was able, and fast forward, it's been over, that's about 10 years ago. But we now have 5 kids. We're here in Northern California, and my wife's been able to stay full-time mom, her dream, homeschool our kids. That's also her dream. And she's loving it. And we've been able to be successful. So it wasn't without its hardships and its challenges, but it definitely has changed the way I approach every single real estate deal. And now we're trying to educate everyone else so that they don't ever have to feel trapped by capital gains tax ever again.
Yeah, because right now, when you said get rid of 1031 exchange, one of the best asset protection strategies we use for California investors is a structure that relies heavily on that. And that way they can avoid the California Franchise Tax Bureau from hitting with all this multiple LLCs, because that's not scalable. That's not a scalable structure for Californians, Massachusetts, and Pennsylvanians and Virginians. So Commonwealth states and California, you're really locked into having a type of trust structure, or Delaware statutory trust, because that's the only thing that's workable really in those states for you just not to get killed on the back end from just accounting fees and taxation. So tell me a little bit about what you mean by avoiding that. So explain that a little bit. I'm very curious, because I'm curious for our clients as well.
Absolutely. So the first thing to understand, there's a huge wealth transfer that's happening right now, and it's somewhere between $17 and $20 trillion over the next 20 years. And this is according to the American Bankers Association. In fact, it's the baby boomers, and it's the largest wealth transfer in the history of the planet that we know of. And what are they challenged with? They're challenged with toilets, trash, liability, highly appreciated businesses, high-end primary homes, and other appreciated assets. And they don't know how to get out and retire and sell and get liquidity without getting hammered by that capital gains tax.
Right.
And so the 1031 exchange is very limited. It only works for investment property. But there's all these other assets that need the tax deferral. And that's where the Deferred Sales Trust is really good. But essentially, there's this big amount of wealth. And how are these folks going to transfer? And they have 2 options. Now, they can just hold and die and hope for the stepped up basis. They could sell and pay a huge tax, which most don't want to do. Or a lot of them just going to stay in it and just feel burdened by all of this real estate and all this management, all this liability, all of this debt. And that's where most people stop, because their CPAs don't know about the Deferred Sales Trust. And so that's where we enter this solution to provide all of those challenges. And so we really call it the 3 secrets to an optimal timing wealth plan. And by optimal timing, to your initial premise of the show, was essentially we're in Corona now, and what's going to happen, and when do people invest, and when are the deals coming, if they're coming. And the key is to have freedom with your time. That means optimal timing, not to have to force to overpay for a property within a short 180 days or 45-day identification period. And by the way, for your listeners, the Deferred Sales Trust is not the Delaware Statutory Trust. Those are both DSTs. The
Right,
Delaware is
that's
simply
different.
another form of a 1031 exchange,
Right.
which provides some, we've done those too, and they have their place. But we do truly think that if you're looking for diversification, meaning you don't have to go into a single asset class or a single, property with one single sponsor, and you're looking for liquidity, which is the second part, which is very beneficial over the Delaware, and you're looking for the opportunity to go into your own deal, right? Because all of our clients want to continue to invest. They just want to do it at a time that makes sense for them. This is where the Deferred Sales Trust really stands on its own. And so the number one secret to understand is, how to sell and defer hundreds of thousands, if not millions of dollars in capital gains tax. Basically, how to legally break free from capital gains tax and to buy and sell your business or property without ever worrying about a 1031 ever again. So the Deferred Sales Trust provides not only an alternative to a 1031, but also provides a backup plan for a failed 1031. So I always love deal stories. And we just did a deal in Georgia. It was a $7.6 million multifamily property. And this client of ours, his name is Dave. And Dave has bought and sold hundreds of properties and done numerous 1031 exchanges for over 30 years. He's a commercial real estate expert. And for the first time in his adult life, in his commercial real estate investing, he decided to use a Deferred Sales Trust. You see, he had sold and he had about $3.1 million sitting with the exchange company, but he had to replace another $4.5 million in debt and buy something of equal or greater value. And he was looking around going, these cap rates don't make sense. I know it's at the high part of the market. These rents are pretty high. I don't want to buy right now. And he's sitting in the exchange. He's looking at deals, not making sense. Yeah. And so he goes, I think I'm just going to pay the tax. Although he didn't pay the tax. Instead, he moved it into the Deferred Sales Trust and he saved $1.1 million of tax. And you can hear Dave's story. I interviewed him on my podcast and he tells his whole story. But what's really powerful about it is he has now legally breaking free from the 1031 exchange, which leads into the second part of this, which is how do you basically clone an optimal timing wealth plan? And so after thousands of closes over 24 years, we've basically figured out how to clone a Deferred Sales Trust optimal timing wealth plan and give all of the freedom that it offers, but also all of the opportunity that it offers, which leads into the second story. We call this the Monday morning quarterback. And this gentleman, he's worth a couple $100 million, okay? And he's a commercial real estate expert, which is my love and my passion for where I like to invest and earn wealth. And for him, he sold in 2006, okay? And he sold at like one of the peak time. And he waited on the sidelines. He moved all of his equity into the Deferred Sales Trust, deferred all of his tax, and he waited. And guess what? 5 years later, that same property he sold was foreclosed on by the bank. And who did the bank call? Well, the bank called him. They said, hey, your property that you used to own 5 years later has been foreclosed on. Would you like to buy it back? He said, sure, but what's the cost? They said, how about 40% less than what you bought it for? And he said, that sounds pretty good. So he bought it back 60 cents on the dollar through his Deferred Sales Trust. But here's the key, all tax deferred. He did not use a 1031 exchange. And that's the part where your commercial real estate broker, your 1031 exchange company, they don't want you to know about this. Why? Because for those 5 years, you haven't been buying and selling property. You haven't been sitting your funds at the exchange company where they make their return. The commission hasn't been being earned on every single equal or greater value.
Yeah,
all
no,
this
this
debt
is
that
amazing.
you're taking on. So that's exactly what we call it, the Monday morning quarterback. I'll pause there because I know I said a whole lot and you guys probably have some questions.
I have somebody going in and out of a door here. Anyway, yeah, I do have a lot of questions. So first on timing. So what if someone is flipping, let's say they have another type of structure, or can they use both types of structures? Because I can see how a DST for some of our investors would be, that's really what they're going to want to do. They're just going to want to keep it in there and do that. But my question has to do with, what about the people who say, well, what if I just want to do, let's say California, people who have a lot of equity in a home. So they want to do a qualified personal residence trust. And that ties up everything. You have to estimate your lifespan. You have to make sure you outlive the trust, blah, blah, blah. Can you use this instead of using that?
Yeah, great question. This is actually the secret number 3. We call it the number 1 wealth building hack. How to get your Deferred Sales Trust to work in your favor and become an investment rather than an expense. So part of why we like the Deferred Sales Trust and we recommend it for so many people is the fact that it's so flexible and it's also adjustable. It can also pass inside of your living trust, okay, and inside of your estate and move to your heirs, and they can just step right into your shoes. And so versus, for example, like a charitable remainder trust, it's really restrictive in that you basically give all of it away to charity after you die.
Right.
And so most of our clients are charitable. They're just not 100% charitable, right? They might be 10%, 20%, 40%, whatever. What's cool about the Deferred Sales Trust is you can pass inside of your living trust, let's say 40% to this charity of your choice, the other 60% over here. So in comparison to all of the other trusts that we've kind of seen, we don't see the flexibility that this offers. And so I'm not as familiar with the one you're referring to, but most of the time, folks, when they look at the differences, they just jump into the Deferred Sales Trust because of all the flexibility. Hopefully that makes sense. And then the second part too,
it does.
Mm-hmm.
Well, it does, because for a QPRT, which was really the thing that most Californians would use for their personal residence, because your homestead exemptions there in California are, well, there's several states. It's not like Texas where you really have to worry about some stranger coming and taking your home. You have to worry about that in California. Anyone can slip outside and they can take all the equity. And I think you're only protected, it's $100,000 for a married couple. If you are over 55 or one of you disabled, you might be able to save $175,000 worth in equity. Well, and that's here in 2020. So a QPRT allows you to bypass taxes for you and your heirs. You cannot skip a generation, but is insanely restrictive, and it's very structured. There's really nothing you can do with that property. You have to have a legacy property to make the cost of setting it up and doing it worth it. And also too, there used to be a much bigger tax gain for it until the Job and Tax Cut Act, and that's going to be expiring in 2026. And then it might go back again. So then there's some weird things with the law that it could be good again, or it could just be okay. So yeah, no, but you did answer my question with that. I'm very curious about this. I have not heard about it. I'm curious for our clients. I want to do what's best for them, for their situation. And 1031 can really lock you in, especially as you said, you're sitting there and there's not a good rate. There's not anything you can find and you're under the gun.
Yeah. And so just a couple points there, by the way. So about the primary homes and such. So remember, a 1031 exchange doesn't qualify for a 1031. That's probably why people are looking at different strategies. The cool thing is the Deferred Sales Trust does. So we just did a deal in Cupertino. And so her name is Maxine. She lives about 3 miles away from Apple headquarters, the $5 billion, corporation there. And big company, right? One of the biggest in the world. And so her property has skyrocketed in value, right? So she's selling for $3.1 million, and her kids are all gone. She's in this big house. She has the 121 exclusion, which is awesome, right? You live there 2 of the last 5 years. You get the $250 if you're single, $500 if you're married. But essentially, she's faced with this big liability above and beyond that, which is about $400,000, which again does not qualify for a 1031. So what does she do? Well, she uses the Deferred Sales Trust, and it's not just solving her external challenges of that $400,000, but now it helps to help her for her income. Right? So she's retired and she's looking for income. She's looking for things to help her. She's taking an illiquid asset that's not cash flow producing, and she moved it into the Deferred Sales Trust that's in liquid diversified assets. And then she also owns multifamily. She might put it back into other deals at a future date when the prices make sense. But essentially she can get all the depreciation off of those real estate deals when she does, and she gets the cash flow along the way. And she gets all of that $400,000 that she would have paid in tax, all of it working for her. And that's really the name of the game. If you can defer tax, you win. If you pay it, you lose. Now, a couple common questions that come up and say, well, what's the minimum deal size? Well, we found that $500,000 of proceeds for every $100,000 of liability is typically our minimums, right? So you need to have at least those two things. Our average deal is about $2.6 million, and we're deferring somewhere around $500,000 or so, or $400,000 in liability. And so those are some of the parameters there. But again, it works for everyone you could think of. We've done car dealerships, we've done optometrists, we've done veterinarians, we've done dentists. We're doing a Bitcoin deal right now. We're doing a horse deal out of Kentucky right now. Did you know you can't 1031 a horse, Tammy and Jennifer?
No,
you actually
did not know that. And I used to own a thoroughbred, and we used to race him. I did not know that.
There you go. But you can Deferred Sales Trust a horse. Okay, this is what's cool. So the folks in Kentucky, they race these horses and they buy them. Let's say 20 of them for $1 million, and then they'll sell them, and they might make a $2 million gain collectively across all these horses when they train them and sell them for a profit. But that being said, you can Deferred Sales Trust all of that gain or all of the proceeds, and then you can use those same funds, guess what, to go back into the horse business. So you start to create arbitrage on all of your deals, and also the asset protection. I know you guys mentioned that in the beginning of the show. What's unique about the Deferred Sales Trust is that, A, you can move it outside your taxable estate for larger deals. all in one transaction, all in one day for the ultra high net worth individuals, which is powerful. But also it kind of has an inherent asset protection itself, because it's a note that's due to you, that's paying you an interest. Typically we try to structure the notes as 10-year notes that you can renew every 10 years for 10 years, and then have an 8% net of recurring fees at the end of 10 years. But that being said, typically, again, we can't guarantee it for everybody in every state, but typically the actual equity inside of the trust is protected. Now, they may be able to access the payments, right? But they can't just wipe you out. So that's also kind of a built-in natural asset protection with the deferred sales trust.
Yeah, that's very important right now, especially since, we keep our tabs on litigations. Normally there's about 100 million lawsuits filed a year. 1 in 4 Americans get sued, but real estate investors, their risk of getting sued pre-COVID was 95% of real estate investors will get sued for something within 20 years. And the majority of them would get real estate investment assets attached with liens, even for non-real estate types of lawsuits. So car wrecks, people don't think, well, I have insurance, I have Geico. Well, yes, but that won't cover 10 rental houses in that rental business. You're going to be paying out of pocket if someone looks you up and is able to find you and you're not anonymous, which we use the power of anonymity to help prevent that. And they'll put liens until the case is closed, because the name of the game is settling. It's not going to court, it's to settle. So I can see how very powerfully that would help. The more you can move away, the more how you operate your business can be separated from where you hold your assets. And if you can make those assets work for you, I think what it was Chris Nagel said, don't have your money just sitting on the couch eating Cheetos, watching your Netflix. You want to make it work for you. So yeah, I'm very interested.
Yeah. And to that point too, Tammy, Jennifer, that's a great point. So you also want diversification, right? So if all of your equity and all of your retirement is tied into, one 50-unit apartment complex or 25-unit or whatever, right? Or even like 10 rental homes all in one single town, you by nature are not diversified. You're in a single asset class. Now you might have multiple units, which is helpful, but still you're a single asset class and you are in a single town. And that's what most 1031 exchanges, they just trade 20 units, let's say for 40 units, which leads to my deal with Peter. Peter was a baby boomer driving from Marin, California to Sacramento, and he has 18 units that he was managing, one of the toughest parts of Sacramento. He's banging on the doors, trying to collect rents. He can't figure out management very well. He's losing his profits there. And he goes, Brett, I have 18 problems right now. He goes, I'm turning 70 years old. He goes, I go, why don't you do a 1031 exchange? He goes, I have 18 problems. I didn't want 36 problems. He goes, I've made my wealth, right? I'm ready to retire and enjoy my time and my energy. And I don't want the debt. I want liquidity. I want diversification. And I don't want the liability that's associated with all of these apartment complexes, let alone the rent control laws that have just put in place. Right. So fortunately, he sold before the Corona crash. And now, it's kind of locked down for evicting anybody right now, and it's a really tough time. But that being said, he goes, Brett, I've never had so much time and energy. I don't have to drive in traffic. I don't have to worry about tenants or laws. Like, it's all diversified, liquid on the sidelines. By the way, you can invest it into securities, stocks, bonds, mutual funds, whatever you like. Unlike a 1031 exchange, we don't have to do it like kind. You could just have it sitting there waiting, and very conservative stuff. By the way, we have some of the top financial advisors in the US who help to manage the money, or you can bring in your own financial advisor as long as you're not related. And we can all work together as a team to execute this strategy, because it's not just the strategy, it's the team of experts to execute this business strategy for you. So that being said, he's retired. He's happy. He's a real estate broker by trade. He's been doing it for 30 years. He's owned rentals his whole life. He's waiting on the sidelines, and he wants for a deal to hit him over the head. He goes, it might take 6 months, 12 months. Because, but I'm not buying anything until it makes sense. And in the meantime, he's just safe, conservative, waiting, and ready to go when a deal comes up.
Yeah, I can see how for people like that, this would be a very good solution for them. And I'm going to be learning a lot more about that, because I can think of a couple of clients I think that might be helpful. That they have theirs held in other things, especially now when liquidity is the name of the game for a lot of people, and they don't have the time to wait, because what'll happen is if you're stuck in that time frame, you have to get something. And sometimes the thing that you have to get is not always the best thing. You wish you wouldn't have done it in the beginning, but it's, that's just what we were stuck with. And again, what you don't know is what you don't know. And every day we're learning something new. Anyway, guys, we are here talking to Brett Swarts. If you want to find out more about Brett, you need to go to the Capital Gains Tax Solutions website, and you can find him anywhere on Instagram, LinkedIn. We will have all the links for everyone under the show, like we always do. So don't worry about it. You can just click on it and go straight to his website, Brett Swarts. That's SWARTS. So anyway, we're coming to the end of the show, and I can't really think of anything else. Is there anything else you want to give us, or a website, or someplace for us to go that you just want to tell us about as we're driving our cars and doing our things?
Absolutely. So I just want to make all your listeners a special offer. They can go to my website, and we have a brand new ebook that we just released. As well, you can schedule a one-on-one 15-minute consultation call to discuss this. And also, if you're a business broker, a high-end realtor, commercial real estate broker, or syndicator, we also we have strategic alliances, thousands of partners across the U.S. collectively with the Deferred Sales Trust, and we want to empower you with the strategy. Essentially, what's happening right now is automation is challenging the value proposition of every single business professional out there. And while a lot of people are competing on just commodities, we want to compete on adding value. And so we truly believe this is the number one way to add the most amount of value for high net worth individuals who are selling highly appreciated assets, because we're going to save 30 to 50% in gain. So we want to equip you with the strategy. We have a Capital Gains Tax Solutions Academy where you can, at your own pace, go through and be educated on this and be empowered so you can add value to your clients, help them save in tax, and so you can grow your business. So please reach out to us. We love the opportunity to connect with you and see if it might be a good fit.
Well, that sounds great. Okay, everybody, this is Brett Swarts. If you want to find out more, go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com, and go and visit him and go through all the things that he just talked about. And I'm pretty sure I'm about to do that as well. So you might meet me on there. Anyway, well, Tammy, you have to take us away because there's only so much time. But thank you again, Brett, for being with us today and for giving us all this information and opening my eyes to something I really did not even know about. And I do this every single day. So thank you so much.
My pleasure. Thank you for having me.
Yes, thank you, Brett, and thank you, Jennifer, for hosting today. We will have all of Brett's links in our show notes, like Jennifer had said. If you are looking for us, we are at Leafy Legal. That is all over social media and also every podcasting platform that you can find, and we would love it if you gave us a rating and left us a comment. We're always looking to improve our show and love to hear some feedback from our fans. So thank you everyone again. If you would like to get a hold of me, my email address is Tammy, Tammy at Leafy Legal Services. If you would like to come on as a guest, or you have a recommendation or just a comment that you would like to make, always welcome there. I'll get right back to you. So thank you everyone again for listening, and have a wonderful day. We'll see you next time. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.